New home builders are cheating America, and I have a question I'd like to ask each and every viewer as I present you information on this video. Are these new home builders in violation of regulations and laws? And are they at risk of lawsuits from anyone that purchased a new home and did not get the proper value calculated on their new home? You guys, I'm about to share with you guys some shocking data of exactly how much these new home builders are paying to buy down some of these interest rates. In fact, in Texas alone, the average home sold, okay, so the average new home sold in Texas cost $51,000 in rate buy down fees. $51,000. Now, here's the issue, you guys. By law, and I'm going to show you guys, Freddie Mac came out December of 2023 and re-warned these appraisers and said, you must take out these types of incentives from the value of the appraisal, and they're not. By not doing that, these new home builders continue to violate regulation and overvalue these homes. There are so many loopholes when it comes to new home building. They're getting away with it, and America is doing nothing about it. And if this is your first time here, welcome back to Real Estate Mindset. You guys already know this video is going to be absolutely bonkers. Now, the data is in, and let's start the video here. So anyone that watches this video, I want you to understand without a shadow of doubt what is going on with the values of new homes. This is an update right here from Fannie Mae. For the sake of argument, Fannie Mae is the real bank, okay? Everyone sells their mortgages to Fannie Mae or Freddie Mac. So they call the shots. They come up with massive regulations. You got to follow what Fannie Mae is saying. This came out December of 2023. This is an appraiser update. They're shooting a shot across the bow. But I'm wondering again is if you purchased a new home and you're having some type of issue, can you sue the new home builder for this violation? Okay, and let me show you. So when we go to the second page here, where it comes to seller concession concern, I want to read you the second bullet point when it comes to the definition of value. So this is warning the appraisers when it comes to appraising homes. The price represents the normal consideration for the property unaffected by special or creative financing. And you guys are about to see here that the new home builders themselves are acknowledging their creative financing and sellers' concession. I'm going to show you by their own word of mouth. They are offering special concessions and special creative financing, okay? Now, the issue here is they need to remove that from the value of the appraisals. And it goes on here. Take a look at this paragraph, you guys. They're warning these builders, these appraisers, stop doing this. You are in violation. You are open to lawsuit. Within this appraisal population, appraisers reported seller concessions for 7.6 million sold homes. A sold home is a comparable. Of great concern, there were 58% of those comparables. So what? 4 million comparables that the appraisers made no adjustments for the concessions. Of course, this tends to inflate the appraisal results and undermines the credibility of the appraisal. And honestly, I don't care about the credibility of the appraisal. I already know they suck and they're bums, and that's why I have to constantly fight them when I was an originator, because they don't know what they're doing. Some do, but some don't, because an appraisal is an opinion, and here's my opinion. Or maybe this is not an opinion at all. They are violating law if those appraisers are not removing these massive amounts that these new home builders are paying for the buy down. So now, as I'm about to read you this report, you guys are going to be blown away. Remember what I just read to you from Freddie Mac. And again, ask yourself this question. Are these new home builders, given that they own the mortgage companies, right? They own the mortgage companies. They have a monopoly on this transaction. That's why I keep saying we need regulation, more regulation with new home builders. Give them incentive to build, but protect the frickin' consumers. Don't have them build while at the same time wrecking consumers and taking advantage of them and manipulating values, because they can do that. They will. They're greedy. That's how this game works. So there needs to be regulation, in my opinion. But let me show you guys what they just reported as far as how much they're paying for these rate buy downs. And this article just came out from Wolf Street, you guys, July 4th. What's the cost of mortgage rate buy downs and other incentives to home builders? Lennar discloses the numbers. So thank God we got numbers from Lennar. That assumes their hedges don't blow up, but they're precisely what hit DR important. So they're saying these lower interest rates are killing these companies, especially if they have to hold them because they can't sell the loans in the secondary market because people don't want to buy a 4% mortgage. There's 6 and 7% mortgages. You guys get it? Take a look at this, guys. This is insane. When mortgage rates rose to 6 and then 7%, sales of existing homes plunged close to 40% from 2021 and by over 30% from 2019. So there is a massive amount of sellers on the sideline, by the way, because sellers refused to cut their prices enough to make 7% mortgage work or affordable, and buyers lost interest or can no longer afford to buy. Commercial real estate has been repricing properties, and the haircuts have been freaking massive. 60%, 70% haircuts right now in commercial real estate. That is happening. But home sellers are not in the mood. They're going to wait this out or whatever. Really? That's interesting. So sales have plunged even as active listings and supply have risen to the highest in years. We're almost at 2019 levels of inventory. We're almost at pre-pandemic levels of inventory. Did you guys know that? We got so much going on right now. It's going to come to a brick wall and freaking implode. And I really hope to you, the viewer, you are preparing for this because there's no question this is going to end poorly. And now listen to this, it's going to start to get good. Home builders, however, have to build and sell houses regardless of how high mortgage rates are. Remember, they are forced sellers. So all this hyper supply that's out there in the market and economy, guess what? We're going to get that at pennies on the dollar once this really, really hits the fan. Now, that's their business. They cannot wait out anything. They have fines, they have fees, they must sell. So they have gone on an aggressive program of buying down mortgage rates, even for the entire term of the loan. So permanent buy downs, not just these temporary buy downs. And they're also throwing in other incentives such as upgrades and closing cost pickups, and sales have held up. Please tell me that you guys remember in 2022 when I first started doing this, I told you guys we're going to start seeing the buying incentives of our lifetimes. We're going to see buying incentives that we've never seen before. And what's happened, guys? That's exactly what has happened with new home builds. Now it's finally starting not to work anymore, and they're continuing to drop their prices. Let's go back in. Now look at this, guys. This is insane. Look at how much this is costing per house. And wrap your mind around how much these homes are really overvalued. They are supposed to remove this from value. On average, Lennar pays $47,000 per house. Wrap your mind around that. That means if you bought a $300,000 house, your house could be 15% overvalued as a result of a Dodd-Frank Wall Street and Consumer Protection Act violation. Again, $47,000 cost, that is creative financing. They must remove that from the comparable data. They cannot calculate value the way they do. If they do, then they are inflating the appraisal result. Here's the number right here. 47. We're not talking about $200, $300 here, guys. We're talking about 15, 20% of the sales price. That is a huge amount. Now let's keep going. Are you guys not shocked? Didn't I tell you guys? I feel so good about this article because I've been out there going broke, traveling around the nation. I don't know why I'm doing this. Warning you guys, it's $50,000, $60,000 buy downs. They're not reporting. I've been warning you. But let's read this. Lennar, one of the largest home builders in the US, filed its 10Q for its second quarter with the SEC last Friday, and it disclosed this. In the first half of 2024, the average incentive cost, including the cost of mortgage rate buydowns, rose to $47,000 per house sold, or to 10% of the average sales price. That's up from 9.2% a year ago. So that's 10, again, not $200, $300. It's 10% of the value, which means if they did not remove that from the comparable sales, the average Lennar home is 10% overvalued from a compliance standpoint, not even PE ratio, not even payment to income ratio. I'm saying from a legal compliance standpoint, the way that I read this is the average Lennar home is illegally overvalued by 10%. Do you guys hear me? Do you remember the video I made with Melody Wright that said they are going to be subpoenaed to Congress by 2025? It's crap like this. This is exactly what I'm talking about. This is proof positive to what's going on behind the scenes. And my question to you is, what are you going to do about it? You guys, but take a look at what's going on in Texas, my home state of Texas. The cost of these incentives vary in market. In Texas, they reached, oh my God, 16.9% of the house. The incentives in Texas are 16.9% of the house. You guys want to know why it's most in Texas? I mean, a lot more. The average is 10%. In Texas, the rate buydowns and incentive are 16.9%. You know why? The more hyper supply that they have, the stronger the incentives will be. Texas has an area with the most concentration around the nation of hyper supply. Again, it's underreported. I know this because I drive around all these metro areas, boots on the ground. You can only get this intel from boots on the ground half the time. You guys, there is hyper supply disaster going on in Texas right now. And the only way that they're able to sell these houses, here's proof positive, is they would give incentives of 16% of the sales price. That's the only way they're selling in Texas. But take a look at this, guys. In other regions, which include Florida, because Florida is like number 2, they amounted to 13.4% or $81,700 per house. Can I ask you guys this question? Does that mean in Florida, the average Lennar house, from a compliance standpoint, from what we just read, Freddie Mac, how appraisal value is calculated, does that mean the average Lennar house is overvalued from a compliance standpoint by $81,000? I don't know about you, but if I recently purchased a new home and I was having issues and they wanted to strong arm me, the first thing that I'm doing is asking for a copy of my appraisal. I'm going to look at my appraisal, and if I see that the comps that they used did not have any deductions removed for buying incentives, well, that's a violation, isn't it? I mean, of course, every situation is different, but hey, guys, more than likely it is. Now, this is a 6 months ending May 31st, so odds are, you guys, it's going to get worse once we go into recession. This is what I'm talking about. When we go into recession, this will probably double. You'll just probably see 80,000 instead of 51 in Texas, right? But take a look at the East Coast. So the East region, guys, they're doing roughly $47,000 on average in incentives. That's 10.5% of the sales. Central, 41,000. There's Texas right there at $51,000 or 16.9%. Jeez. West Coast is 47,000, but only 7.2%. Stuff is super expensive out on the West Coast. Other has some calculations, but the average is 47,000 or 10.1% of the sales price being offered for incentives, which again, you guys, again, maybe you don't agree with me, but to me, that tells me that they are, from a compliance standpoint, overvalued. But take a look, guys, it's not just incentives. So we have simultaneous things going on. So not only do we have these incentives, the incentives alone, even though it's 16% in Texas, for example, it's not working. They also have to lower prices because that is just how overvalued houses really are. There's a lot more room for new home prices to go down. So on top of that 16% in Texas, they've also lost year over year 5% in value. Let me show you. But before I show you, let me remind you what the Census Bureau just did to the data, okay? So on the top scale is what we've been tracking the whole time. It's been showing massive decline for new homes, very, very realistic. And then they changed the price groupings to manipulate us. And now it looks like home prices have stayed the same and haven't been going down. And if this is the case, if this is the real depiction of what's going down, then why would Lennar be reporting a 5% decrease on the average sale price of homes delivered? Revenues were higher, primarily due to an 15% increase in the number of homes, partially offset by a 5% decrease in the average sales price. You guys, home value's down. It fell to $426,000 to $449,000. Lennar, the second biggest builder in America, is acknowledging price decline. They changed it on us and said there's no price decline. Do you guys see how messed up and manipulated all of this data really is? And here's more proof, guys. I just went onto Lennar's website. Look, lock in an FHA fixed rate of 4.25%. You guys, isn't that a special incentive? The average interest rate right now is 7%. That means if I buy an existing home, the average person, as of today, conventional mortgage, is going to get a 7%. They're offering a 4.25%. Isn't that a special incentive to buy? Isn't that special? Because I can't get that. And on top of that, look, and $40,000 price reduction and $6,000 in closing costs. My question for Lennar is, especially because you own the lender, usually own the lender, are you removing those incentives from the comparable sales? And that same question is for D.R. Horton, Holte. Are you in violation on how you're calculating the appraisals? Because according to Freddie Mac, 58% of the appraisal comps are in violation. So a couple other things that Lennar said that's very interesting. They go on to say, we are ready access to capital. We have been able to adjust and capture demand by using incentives to reduce the affordability constraint. But not only that, so lower rate is getting people in there. They are reducing the unaffordability, but at the same time, they're keeping prices, from what I understand, illegally propped up. So thank you for the affordability, but if you're not doing it the right way, then are you really helping? You guys help me answer that question. Are they really helping? Home builders have been uniquely able to capture demand by using incentives, including interest rate buydowns, closing cost pickups, and price reductions to unlock affordability restraints and enable purchasers to buy homes, just like the incentives I literally just showed you. But now listen, there's an additional warning here within the story. It's a double whammy, guys. The economy, the whole system is a mess. Think about this. No one's going to want to buy those mortgages. The Federal Reserve, Freddie Mac, Fannie Mae, they buy mortgage-backed securities so that people can continue to lend. Just use an example. But if Lennar Mortgage is giving 4% mortgages, why would Freddie Mac buy them? And also, why would the Fed? We're doing quantitative tightening. What's happening, guys, is some of these loans are being held by the builders' lenders. And when they hold these loans, they tie up potentially millions and millions of dollars in capital on assets that are potentially non-performing. Why am I saying this to you? Because it can blow up and literally put new home builders out of business overnight. Let's read a little bit about this. Home builders use complex hedges on various types in an attempt to control the risk of mortgage rate buydowns. But there's a huge but here. Last fall, during the rate cut mania, when mortgage rates plunged, D.R. Horton's hedges blew up and needed to be restructured, triggering a $65 million charge to cost of goods sold and thereby to gross margin, which came on top of the cost on mortgage rate buydowns and other incentives it disclosed in January. So the jury is still out on future incidents like this where mortgage rate buydowns exercise their unexpected costs of income. Now, here's something very interesting as well, but the costs are not reflected in contract prices. That's what I'm trying to warn you. The Census Bureau, when it reports on new residential sales, relies on contract prices, the amount in the purchase agreement with the buyer, to come up with its median price. And those contract prices, here we go, guys, don't reflect the cost of mortgage rate buydowns and incentives. Here it is again. This is Freddie Mac warning people. You must make adjustments to the concessions. They are warning people right here. Here's the value breakdown right here. Proof positive. And here it is right here, you guys. Here's the prices. This is revised. When this wasn't revised, I mean, there was a clear peak and home prices started plummeting. But again, this is just more and more evidence that we legit can't trust these people. It's sad, doesn't seem American to me. Seems like it actually is against the law, but when people don't enforce the law, what's it good for? It is what it is, guys, but I want you to think about this. If they're doing all these incentives, all of these workarounds, all these loopholes, and they still can't keep prices propped up, what do you guys think happens when we finally hit a technical recession and, there's an and here, unemployment spirals out of control, like it will, but what happens then? How much will prices continue to go down? You guys, we are in for a wild show in the next coming years. This is about to break out. I hope you guys have learned a lot on this channel about what's going on with new homes. Big shout out to Melody Wright, who has been my colleague in all of this. Me and her have been going around the nation trying to report history to you guys. This is history. Maybe one day this will be in the history about how 90% of America was shaming me, belittling me, saying I'm wasting my time. Why'd you quit your job? Oh, you're wasting money. Ha 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 ha. But when the dust settles, we're going to see who was right in all this. You want to know what? It's going to be us, or the people that were preparing this entire time, the people that were getting bullied and shamed for renting. It's going to be our turn. So hang on, guys, a little longer. Now, other than that, guys, tell me how'd you like the video? Did you like it? Did you not like it? Share the video. Shoot me some comments below. And if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.